let's look at employees. What are the interests of employees? What are the interests of a typical employee? Right? An employee is interested in job security. He is interested in ensuring that he has a regular source of income. So job security is of primary importance to the employee. Then comes career. The employee is interested in building up a career for himself. The employee is interested in building up something which he can bequeath to society, right? So he is interested in his professional advancement. Then let us look at the third interest, money, right? Now, the job must provide money. It must provide income. It must provide adequate income to the employee. So any employee typically would have these three interests. Now, in a situation where the company decides to set up a project which may give high returns, very high returns, but which has a risk that the project may result in the company having to retrench 2,000 employees, right? It may result in the company having to retrench 2,000 employees. Now, in this situation, right, what would the typical employee do? The typical employee would say, let us avoid risk. Let us avoid risk even when the return is high, because the typical employee is interested in job security. Job security is his primary motivation. Another situation is where a company decides to set up a plant, a company operating in the state of Tamil Nadu decides to set up another plant in the state of Uttar Pradesh, right? Now, employees in the company in Tamil Nadu, experienced employees, the company may want to relocate them to its plant in Uttar Pradesh. This move may be beneficial to the employees, but the employee may find it difficult from a personal point of view, and therefore he may refuse to relocate, right? Or there may be a situation where employees are aggrieved and may decide to go on a strike, even though this harms both the financial interests of the company, it harms their own financial interests, and it harms the reputation of the company. But despite that, they may decide to go on a strike. So these are instances where employees may react in a manner which is negative to the interests of the company. Now, let's look at another kind of stakeholder. Let's look at shareholders, right? Now, shareholders, what are their primary interests? Their primary interests are in growing returns from the equity that they have invested in and liquidity of the equity. What do we mean by liquidity? It means that they should be able to encash those shares whenever they want to, right? So these are two primary interests of shareholders. Now, what happens when a company decides to set up a project which is going to provide a lot of returns 5 years from today, but will require funds to remain locked up in the company for 5 years? Shareholders may refuse to invest in the company, may refuse to permit the company to move into that new project because it goes against their interest of liquidity. They want an investment which is liquid, which they can encash at any moment. They do not want to block funds for 5 years. Or if the company has not been doing well for a couple of years, and the reason for this is because of general downturn in the business environment, shareholders may decide to agitate for replacement of management because the shareholders are interested in returns on their equity, right? So shareholders again may act sometimes in a manner which goes against the interest of the company. Now let's look at financiers. Financiers are interested in stable returns. They are interested in ensuring that the money that they have put into the company fetches them a fixed, stable but certain rate of return. What could happen in case the company decides to go in for that project we talked about earlier, which is a high return project but is also a high risk project, right? Now in that case, the financiers may say that they are not interested in providing loans to the company, right? They're not interested, they may refuse to give credit, they're not interested in providing loans to the company because of the risk involved in the issue, right? Then we look at suppliers, right? Now suppliers, their interests are in a stable long-term relationship with the company, and they're interested in sanctity of contracts. Now what does this mean? Sanctity of contracts, we are talking about when there is a contract between large engineering companies like the Murugappa Group companies, right? Now the Murugappa Group companies would typically have 400 or 500 suppliers. Some of these suppliers could be very small suppliers, right? Small in relation to the Murugappa company and sometimes small in absolute terms. If this supplier enters into an agreement with the Murugappa Group, it assumes that the Murugappa Group will stick to that agreement. The Murugappa Group itself, of course, has very high standards of behavior, and therefore it will stick to the clauses of the agreement. But unfortunately, there are other large companies whose methods of behavior are not equally ethical, right? And this is where the supplier might feel that his interest is being compromised. So what would the supplier do in this case? The supplier might refuse to give any product to the company on credit because the supplier is not sure that if he provides products to the company on credit, he will get a payment from the company in the time when the company has promised him. In the worst event, the supplier may go to court against the company, right? Now, these are instances where the supplier's actions may go against the interests of the company. Now let's look at customers, who are again stakeholders of the company. Customers are interested in receiving promised benefits. Customers are interested in getting what has been promised to them. And typically, if a customer does not get what is promised to him, he will buy from elsewhere. The customer will buy from elsewhere, and through this act of buying from elsewhere, through this act of disowning the company, he acts against the interests of the company, right? So here is another stakeholder who could act against the interests of the company.